Alright, so should be good to go. King, I told you I'd make you a video last night, and I failed, so here it is tonight. So this is on volatility crush during earnings. So I found a pretty good example here in Apple. Getting to search for like the best example because I wanted you to kind of see. I mean, this happens in every case, but in particular cases, you can see it best. So it's mostly when the stock trades sideways during an earnings. Like these big gaps here, you're not going to see the price difference because it's going to be skewed by the delta, since the stock moves so much. Delta being the movement, the price. But you can see, I believe, here we had earnings. You can see these giant drop-offs in volatility where it goes from, here it's not too terrible, but 26 to 20. So this is $10.25 to $10.26. So I can go up here to my Analyze tab, think back. I have $10.25. Now we can see the price is trading here at $11.28, $111.28.5. Jeez, it beats. So let's go, for example, the 118 puts. So first strike out of the money. I'm sorry, we'll go 117, just so that way the spread's a little bit smaller here. So let's say I'm expecting the price to drop at least a few points below 117. So let's say 255 is our mid price here. So you can see we have a volatility that's honestly not even that high. Your closer expiration is even higher than this, but for this example, we're at 36%, and this is the expected move plus or minus 5.8 points. So we buy the 117 puts because I expect Apple stock to drop below 117. So if I fast forward one day, I know that the price is going to drop because this is already past. So I go to the 26th, 117 puts. We can see the price dropped below 117 to 115.59, and the price of the 117 puts is here. So really, we didn't make any money off of it. We predicted that it was going to drop. We didn't make any money off of it. And that is because volatility was crushed, which you can see here in the charts. And that wasn't even a big drop. 0.26 to 20. So now, for example, we're in FDX right now. That's one of our trades we're currently in, and we can see here that we're up at the same level that it started at, and you can see these previous drops, 29 to 20. Here we had another similar drop, rated earnings. So when you see these types of patterns, it's volatility is gonna rise up until earnings, and then it usually drops off. Well, always drops off, I should say, from what I've seen. Now you have some that will be a little bit more sideways. We're also in GameStop. Well, I am. I don't know if anybody else is, but I called it in there. But you can see also volatility's here. It's coming down a little bit, but we have earnings coming up in a couple days. And then what was the other one? Guess. That was a recent one that you said, King. So you can see the giant vol drop here. And let's go back and look at this one too, because it's not too terrible of a drop either. I mean, it looks bad on the chart, but it's not as bad. So let's say current price or current date. March 15th. We'll go here. Let's see where earnings. I think it was just today. Is that right? 315. See, it gapped down today. So 315, 316. So analyze. We're at 315. I know the price is going to drop. I'm sorry, I'm change ticker here. Guess. I know the price is going to drop, so we'll buy. We'll even buy here. Let's act like it's a binary event that we're trading. So the price is going to drop, so let's buy the first out of the money, the 12 put. So let's say 45 mid price there, and next day. So this is a little bit better. Right, that was 12, yeah, because now it's in the money. So this is better. What is going on here? All right, we'll go from, what the fuck? There we go. So 45 to, so yeah, I mean, you made money here for sure, but I mean, it's working against you. So let's just go one cycle out and see what it looked like. 15. So here we're at a little over 70. So again, it's a nice jump, but it just, I guess you got to realize what you're giving up. So you're working against something that you know is going to happen here. Again, here it was at 52 the day before, and it dropped to 30. So, and then the strategies that we've been doing. So FDX. So I'm just after expiration here. So vol is at 47. I think it dropped since we've been in. Let's take a look. FDX. I guess it stayed about the same. Yeah, because IV rank was about 77. So we bought the Iron Condor here. But all we're working off of here is that since volatility is high, that this expected move is over exaggerated, because we know it's confirmed that volatility, implied volatility, is overstated, which just means that the present fear is not as bad as we think it's going to be. So the present fear of the future is not as bad as we think it's going to be. So we overpredict the volatility. Another word for implied volatility is assumed, or yeah, what we assume it's going to be in the future. So yeah, so that's the basis of it there.